So in this video, we're going to adjust the 2006 financial statements for the changes we suggest based on what was confirmed in the interviews. And then in a separate one, we'll do 2007, and then you'll be equipped to do 2008 after I've walked you through those 2 years. We'll have a separate video to reconstruct what might have been the pawn shop activity that is less certain than these changes that we confirmed through the interviews. Okay, let's start with 2006. Let's go on over here in this tab that says support for adjustments. We're going to list out the adjustments here in this area that's not been completed, and down below I just pulled some notes out of the interviews to have the support here ready for me to use, or to you to use. So the first thing we want to do, there were two things in 2006 that came to our attention that we want to change. One was a reclassification of $20,000 from the line of credit to payroll liabilities. That was incorrect. That the line of credit was borrowed and is owed and shouldn't be changed and put into a different kind of liability. And the other was that Mr. Workman bonused himself $45,000, and he first recorded it as a loan, and then he wrote off that loan against sales. So that reduced sales and erased the loan, but we would like him to pay that back. So let's do that entry. So let's do that entry first. We'll call that entry A, and the amount was $45,000. And we'll say unauthorized bonus to Workman. And then where are we going to put it over here? Well, it depends on where in the general ledger it was, because we want to fix the general ledger. So let's look at the general ledger over here and go over here to sales and notice the $45,000 there, and that's a debit which reduces sales, so we want to reverse it by increasing sales. And then the debit will go to a new account called due from Workman, which is what he needs to repay. Alright, so let's go back to here. So we're going to increase sales by the $45,000, and we'll put our reference A so that our documentation is very clear to where these adjustments came from. They go see the notes. And then the math is not done for us, so let's put that in here. So sales minus cost of goods sold is gross profit, so that creates that math for us. And then down here, total expenses, go over here and use the sum and grab everything that there's nothing in there now. There may be something in there later. And then operating income is gross profit minus total expenses. And then operating income, operating profit, that should be income before taxes there, plus interest income. I probably would change that to income before taxes. I like that a little better. Change that on yours. Okay, so any change that was made to the 2006 financial statements would have been closed out to retained earnings, so that we're going to close that out to retained earnings in our balance sheet for that particular year. Let's go over here down here to the balance sheet tab. And we'll put an asterisk here. Indicating where that number came from. The source is closing out the 2006 income statement. Now the balance sheet here is the 2008, so those are the resources available to the business at the end of 2008, plus or minus the changes that we made. Okay, so that was the first one. The other one was a reclass of liabilities. So let's remove that $20,000 from payroll taxes and put it back in the line of credit, because that was borrowed and is still owed, so it needs to be reflected properly on the balance sheet. Okay, and then the due from Workman to repay that bonus that was unauthorized. So now the total assets and the total liabilities and equity, or the changes to them, balance. And after each entry, you want to verify that your total assets still equal your total liabilities plus equity. Otherwise, you probably are missing a piece, and stop and fix that before you keep going. If you wait until you've done 10 or 11 entries and then you're out of balance, it's very difficult to find. So double check after each. Okay, so let's update then the financial statements. So the original plus the change. And copy over that math there. We don't have any changes here, but we can put the math in. Make it all work. So our income before taxes went up by $45,000. And our balance sheet grew by the $45,000 what were owed back from workmen, and the change to the equity, the retained earnings because of the profit that had not been previously reported. So now we're ready to do 2007, and that'll be the next video. Let's put the reclass in here. So that's better documented. Okay, so now we're ready for the next year.